Hi there. It looks like everyone's pretty much in now. See a few more kind of coming through. That's all good. And yeah, for those that don't know me, I'm Sam. I head up the account management team here at Futrli. It's nice and dark outside now. It's been raining all day, so hopefully you can kind of see and hear me without any issues. Obviously, do let me know if there are any issues. I've got my wife on dog watch, so hopefully we don't get any interruptions from our small dog that likes to bark at people when they kind of go past the house. And yeah, obviously, if you've got any questions through today, then do just use the Q&A function. We probably won't need the full hour. Probably need maybe only half an hour. We'll see how we get on, but at least we've got that time booked out in case we do need it. And I'll send across the recording as well of today, so you have all the material and everything you need. And yeah, today's session is to go through how to understand your portfolio, how to understand the risk really, and how we can start to move that forward using the tools that we have at Predict, or at Futrli rather, using Predict. So let me share my screen and we'll take a look through a couple of things. We're going to look through a PDF and then also some other kind of documents that would be of use, I think. So hopefully everyone can see this now. This is a PDF. It's all around the Your Firm Plus service. So it's all around understanding your non-advisory clients. And effectively, we built this out off the back of Predict, seeing that Predict is working really well, but then also giving a strategy behind it, something that really underpins and gives focus to how we can really engage with clients. And some firms have been running with this and called it either the name of their practice plus, or maybe accelerate, or you can call it kind of whatever you want, but it's all around that non-advisory client sector. And as we scroll through this document, we'll see the first page is all around some statistics. And these statistics, if I can get my words out, came to our attention only a couple of weeks ago. But it's off the back of a survey that the National Statistics, there, that difficult word again, came out, and it's all around these different sectors and how long their cash reserves are going to last for. And obviously, certainly, I'm sure all of you know that we are in a very tricky situation at the moment, and next year is going to be arguably even more difficult, especially in those first few months. And the overarching theme from here is that we can see at the bottom that 50% of businesses either think that they will have less than 3 months cash or just aren't sure. So it's quite interesting, I suppose, those stats. Certainly they're not sure, just don't have any clarity as to where they're going to kind of continue over the next few months. And we can see the different sectors, obviously hospitality being the most heavily impacted, but all the way through down to IT, for example. A good sector of clients thinking they're going to run out within 6 months, for example, and then a lot are unsure as well. So arguably it's things we don't necessarily, we previously knew this information, but it kind of rings true a bit more, and it kind of made the picture that much more obvious, really, because we knew that obviously next year was going to be difficult, but when we then saw these stats at Futrli, we were quite surprised, I suppose, about the impact that some of these sectors of clients are seeing. So off the back of that, we've then started to kind of develop this, really, I suppose, to see what we can do to really help both those small businesses, but also help your practice. Because if we then have those clients, which are certainly your clients, having a tricky time, that's going to impact on your revenue as well, from an accounting perspective. And as it says here in this guide, and what this session is all about is having a thorough look through from this strategy. If we lost X percentage of your revenue, it's going to massively impact it. And because that revenue is compliance driven, these are non-advisory businesses which use you to comply with taxation laws. It's unlikely that they'll have a forecast, maybe a cash flow or a freeway in place, or an internal finance team advising them, because maybe that top tier advisory work is a bit too complex, a bit too expensive for them. And I know I can see some people on the call today use a Futrli Advisor, so our management accounts long-term budget solution, and that's great for your top tier. But we're looking at the clients which are maybe more compliance driven. As it says there, it's too complex for them, that management account service. And these clients, therefore, are a bit smaller, don't have anything in play. They aren't protected, and maybe they are more at risk. So we know you've wanted to do more with them. We know there's always been opportunity within this sector, but demand, need, time, cost, technology has all made this hard. So today, however, these non-advisory clients are likely to be more at risk. The statistics, there's that word again, don't lie. The ONS data from the 2nd to the 15th of November states that 50% of all businesses think that they'll run out of money within 3 months or just aren't sure, as we said there. So as it kind of highlights there, if you lost that revenue, what's the impact going to be on your business? Certainly we can see some stats here from other firms that we've been speaking with, various different sizes, various different kind of cloud splits and advisory splits. But what we can see, however, overarching theme is the annual revenue at risk. There's a lot of money here at stake, because certainly if those clients don't survive and have that tricky time, then that's going to be kind of difficult for all parties involved. But then understanding that sector of clients, that 90% of your portfolio, for example, that is more compliance driven, is difficult because it takes a lot of time. Not enough staff at the moment. Maybe you've got staff on furlough, or maybe just compliance is backing up. So the cost of that to kind of focus on the assessment of those clients is difficult. And how would you do it? So we've then brought around this solution that within 7 days, the Predictive management service is rolled out for yourself. We will then connect those clients to Predict. That's those cloud clients, the Xero and QuickBooks Online clients. And the Futrli risk management team will connect those cloud compliance portfolio to Predict. We'll then analyze as part of step 2 and record those clients against 12 core KPIs. And a weighting and tiering system then overlays the data. And then in 7 days, we'll present that data to you. We'll therefore present a full portfolio report with prioritized client segments to enable immediate triaging. So we can therefore have a complete list of all of our clients and know exactly who's on fire, who needs that critical support, and who do we need to manage over the coming weeks. And we then, as part of phase 1, do this analysis for you. So we do as much of the heavy lifting as possible because, as I said at the beginning, that Predict is a fantastic tool, but certainly we want to go the extra step, really, I suppose, and give as much support as we really can. And there's a nice quote here from a partner of mine that is certainly seeing some value from this offering. Invaluable new service. The results of given our team's immediate focus and clients slightly drowning have been saved already. It's really good to see some kind of immediate reaction from that. And this analysis, like I said, is what we do for you within 7 days, and we'll produce that report for you. So what I'm going to do is show you an example of that report. Let me just switch my screens and share the correct one now. So hopefully you can see this now. So now this is the report that we'll build for you. Obviously, this is example data. This is example company from like 24 clients connected up. This is what we'll create and then present to you and the team within a week. What we can see here on the Your Firm Plus, the kind of dashboard overview, we have got the amount of revenue that is at risk right now. And we've also got then the amount of opportunities that might be there. Because certainly I'd like to think that from your portfolio of clients, we're going to have certainly some that are going to be at high risk, but we're going to have some opportunities as well. Some clients which are have got money in the bank, they've got everything in order. Maybe that's then how we manage that growth. Maybe they've had a positive time during COVID. Certainly, it will then pick up those pieces of analysis. And we can then see here in this kind of sector section a list of all of your clients. And obviously, client 1 would just be the name of your clients. This is just example data. We can then see quite quickly what our clients are at. Nice overview. We can see which tier they're in, so if they're in a medium risk or high risk, or if they're in that opportunity phase. We can see a color coding of their cash flow risk, so red being obviously bad and green being good. And we then got a health score, so excluding cash flow. So we can clearly see this client here, for example, has got a really positive, a negative cash situation. They are going to be maybe needing a loan, for example. We can quite quickly see through the list of the clients, those red, I need to give them a quick call and understand that if they are aware of the situation and how you can manage that maybe with a loan. The health score, how does that impact the client? What does that mean? Is their situation uncertain due to the amount of unpaid invoices they've got, for example? But quickly we get an overview on this kind of first page. And if I scroll to the right, we can then see a further breakdown of our clients here. We can see the amount of clients in total that are in high risk. We've also got the total clients because we've connected up as many as you want to put through, but it's then given analysis of the other clients that might not have been connected up. But certainly it's important to think of this service as casting the net as wide as possible so we can really understand their portfolio risk and then move forward from that point. If I then go to the data, this is what we'll do for every single client. If I just run through those KPIs that we're looking at, it's the cash end of December, cash end of March, and end of June. So we can use Predict's accurate forecasting ability and the team's data-driven skills to understand the money in the bank at those periods. We can then see an average monthly revenue through those coming months, average monthly profit, total unpaid invoices, overdue invoices paid today in Predict, unpaid invoices as a percentage of revenue, total unpaid bills in future cash flow, overdue bills paid today in Predict. We can also see, because Predict is not just looking at cash, it's looking at everything in the business. That's everything from the P&L, the balance sheet, the cash flow, the trends, the invoices, the bills, you name it, Predict has got it. It's looking at things like current assets, current liabilities, end of March. Off the back of that, we can then do total debt owed from loans, unreconciled bank entries as well, which is always important. Just to flag, maybe a client's got 300 unreconciled bank entries. So therefore, we need to ensure that that client is up to date so we can provide kind of real information that is going to be valuable for that client. So certainly just about raising these flags so that you and your team can take that proactive approach in the kind of through the rest of December and into the new year. If we then look to the benchmarking tab, this is then a breakdown of our clients. So we've got a chart here showing all the clients that are in the analysis. We can then select a particular client and see where they drop on that chart like that there, based off a variety of KPIs that we've got in here, the ones that we went through on that previous tab. We can then see the top 20 off the back of that, or maybe the bottom 10, depending on whichever way we want to look at it. And we can then see kind of further analysis, looking at client 19 as where does he compare to the rest of the portfolio. If we then go to client next step, this is then a particular dashboard of that individual client. So we can then use this dashboard. So say we're speaking with client 17, we can then use this to talk through where the client is at, as well as maybe Predict as the backdrop. So Predict could be then managed by the client on an ongoing basis. We can then bring up Predict and we can use this as well to refer to. Really interesting amount of information that we've got in here. Future cash flow, how it's going to be comparing in the next 6 months, liquidity, because we're looking at those items on the balance sheet. We've got bills, invoices. So it's a complete overview. And to reiterate, this is the work that we're doing for you. We'll produce this report and present it to you within 7 days. The weighting is then looking at that bottom third of your client base and giving an average so we can understand where your portfolio is at to enable that health score checking, so we can then build that in, as it says there in that note. So this is then going to be tailor-made for that portfolio of clients you're working with. So that's the report. This is what we'll then build out for you and then present to you, like I said, as part of that phase 1. And if I then share my screen again, we'll jump back into that PDF. We've now completed phase 1. We've understood where our clients are at. We can then move into phase 2, which is the risk management phase. So the prioritized tier 1 and 2 clients are, as we would recommend, are called by your team with their results explained to them. So a quick, urgent 30-minute Zoom conversation is then booked with the client, and the Predict technology will be the backdrop to every meeting. The first meeting and then subsequent meetings through into phase 3, which we'll come on to, follow the same simple structure. Simplicity and client-friendly language is key to the cohort of clients. The process can be scaled across your firm. Firm revenue protection is the primary purpose of the risk management meetings. However, lending opportunities, such as we were saying there, if we highlight in March they're going to be overdrawn, how does that impact the client's business? Do we need to surface a conversation around lending? Therefore, it's going to certainly help the client in that tricky cash situation, but also then commission off the back of that. If you've got swoop in play, for example, one of our aligned lending partners, or maybe you've got Capitalize or whoever it is that you use, certainly that's going to be an interesting conversation. Maybe other cost reduction strategies, business restructuring, chargeable value bringing projects. All of these will present off the back of this valuable data that you can use, that we've built out for you and is ongoing through Predict. So that initial meeting then is really quick and easy to do. Certainly, as I said, Predict is there as a fantastic solution, but we're then giving you and your team exactly who to speak with, what to speak about, and when to speak to them. So therefore, that simple and scalable process is going to be around that 30-minute Zoom conversation to begin with. That's those critical conversations that we need to speak with. We're going to invite the client into their Predict account, and we're going to confirm that they've logged in on that first conversation. And we can then speak through those analysis points and check the key areas, the invoices and bills, the P&L accounts for activity patterns, check affordability of debt, text the tax liability, and add any deferment in Predict, and show them how to add and use the manual predictions in the powerful best decision-making environment that says there, which is Predict. So we're effectively using Predict in the conversation, we're understanding where the business is going, and we're then getting them to best practice so they can start to use that system on a daily basis, a weekly basis, so we can then continue that relationship, continue that check-in, so that the client is protected and we're being proactive so they do remain healthy moving forward. And obviously booking that follow-up conversation so we can keep that conversation going. Then in phase 3, it's all around the growth. So the impact and value to your clients and firm from the risk management meetings are the springboard into a new type of advisory service that is finally right for these compliance clients. So saving these businesses are phase 1 and 2. And those meetings are a guided and impactful introduction into financial best practice and the impact of instant forecasting as a supportive and insightful tool. Phase 3, this phase now, is a logical next step for you both. So Your Firm Plus is a regular, simple and risk mitigating service which benefits your client by ensuring they can cross-check decisions and have a clear view of future cash flow and performance. So in these short, sharp meetings, you will check and challenge the threats, opportunities, and cash flow. So these meetings now can be maybe a 15-minute conversation because we've mitigated the risk in part of kind of phase 1 and 2, and we're now having quick conversations off the back of it. So the clients are ready; they're already using Predict on a weekly basis. Those 5 checkpoints are a familiar process. Phase 2 has laid the foundations of better decision making, and there's already a fluid action plan in place. Monthly accountability meetings are therefore just calendarized and a quick 15-minute conversation. Then in the meeting, activity and cash predictions are checked by spikes by you. Their assumptions are challenged. You continue to plan together and you hold them accountable for what was agreed in the last meeting. And we just keep that ongoing. So therefore, we're then starting to create a revenue source from a previously untapped non-advisory client sector. We've therefore protected them, and we're now starting to generate revenue off the back of it from that ongoing supportive work. And I suppose what client wouldn't respond to having next generation prediction software in their pocket, which they can drive and really start to understand how their business is going to be changing on a daily basis, and having their accountant on the edge of the phone in that kind of once a month check-in conversation. So we then recommend that the phase 2 meetings, that risk management stage, is not charged for. It's an investment in your revenue protection and risk mitigation. But then recurring revenue will happen if you position the Firm Plus service as a human accountability check-in plus Predict technology to ensure they're running as efficiently as possible. So as I mentioned, that having Predict in your pocket as well as your accountant on the edge of the phone. You've already demonstrated the value during phase 2. You've kind of put those procedures in place. You've kept the ship steady, and we can then start to move forward into this kind of phase. Additional one-off revenue opportunities will be generated from project work. So the fees that it's outlining here, between £75 to £150 a month for your client, that covers the Predict monthly cost and 15 minutes of your firm's time. And there's a kind of a range there of 75 to 150, because I know that one partner that's come on board recently with this is going to be charging £75 if the client wants a 15-minute conversation, maybe around about £100 if they want a half an hour conversation. So it certainly depends on the type of client, how you want to work it, but certainly there's a good ballpark there. But then using £100 as a baseline for this service, it will generate £400 an hour. Because 100 clients, we can then start to make these kind of examples of revenue off the back of it. Because certainly it is an instant solution for your client to load up and use, but it's an instant solution for certainly for you guys when you're speaking with your client, because there's no need to kind of build out a report, no need to kind of complete that forecast that you've been kind of working through, because Predict is doing that all the time. So we just need to load it up and it's there ready to go. We've understood where the client is at because we've created the work and we've done that risk assessment strategy document for you to begin with. And we've then at phase 3, we're up and running certainly because we've touched in on those previous points. If we then go through into the cost, so the cost is in a phased approach, but certainly the costs in the first phases will become net negative due to the likelihood of project work, as I keep saying. So lending opportunities will arise, and those projects that we're identifying are certainly going to help in that kind of return on investment. Because I think one key return on investment is understanding where the clients are at, so we can have that proactive conversation with the clients. But then obviously off the back of that, there's opportunities then arise. These then costs are listed per client per month. And we can see a phased approach there. So in phase 1, it's £5, phase 2, £10, phase 3, £20. So it's £5 per client per month. So if we're looking at 100 clients, for example, then that makes that £500 for phase 1. However, it's good to note in this point that we don't need to keep the same amount of clients through the phases, because we need to understand firstly where your clients are at with phase 1. We need to do that risk assessment to really then scope the subsequent phases. As an example, we've got some partners going through it and we're doing like a couple months at a time. So a couple months for phase 1, a couple months for phase 2, understand where the clients are at. Do we need to move forward with the same 100, for example, and then address it at phase 3. But in phase 1, just to reiterate how it all works, we then connect those clients to Predict. The risk management team then creates that report and delivers it to you within 7 days. We'll then also produce and continue ongoing support with you. So, for example, I'm one of the account managers here and head up the team. We'll then be working with you on a regular basis to ensure that the team are fully up to speed with how to kind of get involved with Predict and how to use it. There is no certification required. There's no in-depth training really. It's just understanding how to log in really, because it is that instant. It is that easy. Phase 2, we've now understood tier 1. We've contacted them and spoken with them, and we're now starting to work through the rest of our clients. We're starting to now use Predict in the screen in all these meetings, and we're highlighting those opportunities that might arise. Then in phase 3, we're starting to flip those clients into that plus service. The staff are now fully versed in Predict, the clients are fully versed with Predict, and we're now starting to work forward into that revenue growth from that previously untapped sector. That's pretty much how it works then. Then the next few pages in this document, just simply how Predict properly works. So I see some of you on the call, I've shown Predict 2 before, and we probably covered off some of these points, but it's worth to go through. And Predict is unique in the marketplace because, as I said a few minutes ago, it is combining everything in the business. It's not just cash flow, it's P&L, balance sheet, and cash flow, combining that three-way approach, that indirect forecasting, with direct forecasting, invoices and bills. So it's certainly the first and only hybrid forecasting solution. So information that it pulls from Xero and QuickBooks is reports. So it pulls in the P&L and balance sheet, means that we can get that information quicker and ensure that whenever we present actual data, what you see in Predict will always match Xero and QuickBooks. This includes any adjustments to equity and any currency gains and losses. So I think that's important there. We need certainly that to be accurate. Invoices, Predict is aware of all the invoices and bills. Any changes to their status will be known and will be synced through. Journals, we pull the information at a most granular level in order for us to create your own predictions. Bank transactions as well. If I then continue through, we then look at the P&L and balance sheet activity. So it considers cash, invoices, and journals. Predicting each of these separately allows us to not confuse the impact on cash. It's especially important on accounts such as payroll clearing and payroll journals, not impacting cash and cash payments. Because I think when we're then looking at everything in the business, the P&L, the balance sheet, the cash flow, we're then making every prediction that much more accurate, because it's not just looking at the cash movements, we're looking at how every aspect of that transaction affects what we're seeing in Predict. It also creates journals. So the journals mentioned above are recreated. So currently we only do P&L to balance sheet journals. And we go back and look at the balancing account to try and mimic the accounting as much as possible. It looks for trends, including, but not limited to, are the numbers steady? Is the growth consistent? Are we seeing weekly, fortnightly, monthly, quarterly payments? And I suppose on that point about trends, if I just skip down to these points, I'll certainly share this document so you can read through it in further detail later. It looks at kind of COVID-19 and makes adjustments. So wherever there's been a clear drop-off in numbers, which looks likely to be a result of COVID-19, we make adjustments to the numbers, returning them to pre-COVID-19 levels. So this is, of course, not a one-size-fits-all approach, and for some predictions, we'd be better off to toggle off and add your own in. But certainly, what it's trying to do there is understand, let's say in March we have a huge dip and COVID's been impacted. If we then normalize that, that means that it's not going to reforecast COVID. So because it's not using AI, it's using specific accounting calculations, it's then being able to understand those periods and not reforecast COVID, for example. Otherwise, if we reforecast COVID, then what we're looking at in the future is not going to be accurate at all, is it? So I think having those abilities to understand the adjustments and understand any obscure increase or decrease like that, then just makes that assessment that much more accurate. It explains the logic as well. Certainly we've got this feature in there called This Number Explained. So any forecast that it builds out, you'll be able to click on that figure and it'll tell you how it's been calculated. Again, having complete clarity over how it's forecasting. It calculates accruals and cash VAT as well. So it's looking at every way that a client might pay their VAT. And then we feed into the cash flow calculations, everything that I mentioned pretty much above. So balances, debtors and creditors, automatic predictions and manual predictions as well. Because certainly you can then add your own prediction into it in addition to the Future Predicts automated forecast. Or you can turn it off if it's not where the plan is for the business, and you can then add the correct one in. Certainly, it then allows you to be as specific as you need to, building in the forecast, whether it's overlaying on top of the Future Predicts, just using Future Predicts as well for a lot of the clients, and a lot of the accounts might be accurate. But you can certainly have that kind of customization that is really simple and really easy to do, because Predict has been built with a small business owner in mind. That's how Predict works. And obviously, the whole purpose of what we're looking at the moment is that risk assessment. So certainly the idea is then, as we scroll back up, just to recap, it's about analysing those key KPIs, which will then build out for you to understand exactly where your portfolio is at. So we can then really start to have a proactive service, a engaging service, but also one that really protects those clients, because we'll then do that work for you, give you the assessment, and we can then start to understand that risk, mitigate it, and then start to kind of have a good start to the year with those clients. So that's what I wanted to cover today. That's pretty much everything I wanted to go through. I saw a couple of questions pop through, so if you've got any other questions, then certainly feel free to use the Q&A option now. Yeah, one question that came through is that is there a minimum number of clients we need to put through Predict Plus? Technically, it's around 50, but certainly if we can get as close to that as possible, then we can certainly kind of move that forward. The idea being is that we need to, and the purpose of the risk assessment is to understand where the risk for the whole portfolio is at. If we pick 2 clients, for example, out of 100 cloud clients, and we're probably going to miss a lot of clients that maybe we need to understand exactly where they're at. So the idea is that we start to understand the portfolio and move it forward. But certainly if you've maybe got a specific sector of clients or you want to break it down a little bit, then certainly let us know. But yeah, certainly that post is not available for 1 client, for example. But if we get into double figures and get as close to 50 as possible, then that's certainly a useful thing to do. Cool. Another question came through about will I share this recording? And yep, if you joined late, but yes, certainly I mentioned I will do. I'll send you the recording. I'll send you a couple of screenshots of that report that we do, as well as the document. So if you've got any questions off the back of it, then certainly feel free to let me know. You'll have my details. And yeah, I think that's pretty much it then. So as I said, we've got only half an hour, which is good. We've got 25 minutes left. So I could let you get back to your busy day. And I'll be in touch. Any questions, like I said, just give me a shout. Thanks a lot. Cheers then.